You're watching Masters in Trading Live with Jonathan Rose.
Hey folks, Jonathan Rose here. So I've been a trader for nearly 30 years, and now I help regular folks just like you trade like the professionals. That's why each day the market's open, I get on here and I share some of my favorite setups, and I teach you strategies that I use to profit from them. And if you're one of my all access members, I'm going to spend some time at this end of this video going through some real-time trade setups and recommendations and talk about our overall portfolio. Like I do every morning, I got the chat open. We always get in about 10 minutes early. Say good morning to everybody. Really appreciate everybody joining. If you would, guys, give it a thumbs up, subscribe, share with all your friends. It really, really helps. What are we going to talk about today? Pretty good week. We're finishing it strong. We had a couple of winners to talk about. Earnings season is when we thrive. We're going to talk about our earnings advantage program. The thing about earnings, it's rinse and repeat. In 2026, there's going to be 4 earnings announcements from companies. In 2027, there's going to be 4 earnings announcements from companies. So imagine having a rinse and repeat approach for every single earnings season. That's what we have. Before I learned this, I was gambling. After I learned this, I found consistency trading earnings. I'm going to walk you through it, but I got everybody here. Thank you all for joining. Gregor, Don, Livy, George, Rick, everybody. Let's go over the screen. Let's go and have some fun. Okay. Here we go. Bunch of things to cover. I want to talk about earnings. We are in the heart of earnings season. And when earnings approaches, we trade it the same way. I'm going to explain exactly how we trade earnings. So members, you guys get my trades, but even if you're not a member, I'm going to walk you through exactly how we trade earnings every single earnings season. It's rinse and repeat. We do the same thing, and these are very, very high probability trades. Give you a little update on what's been going on this week. We've been crushing our earnings. We had a major big trade in ticker TPC yesterday. And a ticker TPC, Denny was able to make about 2K. TPC, $1.30 out of 4, made 100% out of 4. So these were really good trades. Well, today, we did it again with Task. Stop at $3.90 on Task. Let's see if it goes to 5. Sold Task at 4. I'm out at $4.20 for Task. So I'm going to walk you through exactly how we made these trades, but just give you an idea of the movement that we've had in these different names. We have TPC, which exploded higher yesterday. Remember, we have options, we're leveraged. We made a shit ton on TPC. And then today, we have Task. Look at Task, guys. Task is another one, just gapping. When stocks do that, option traders can make a whole bunch of money. So as we celebrate with our winners, what do? We play the Glockenspiel. 2 winners, actually. We have 2 Glockenspiels. Perfect. Thank you. All right. I want to explain to you exactly how we do these earnings trades because, great, it's up here. We're showing these great results. Maybe some of you guys are getting FOMO, but hey, let me show you exactly how to find these trades on your own. All right, members, it's test time. You guys can help get the answers correct in the test. So here we go. Earnings release, Q1 25. So I'm going to go over the last 5 earnings releases. Okay, Q1 25, Q4 24, Q3 24. Okay, this is an example. I'm going to show you how we trade earnings. 3 different stocks here. Stock 1, stock 2, and stock 3. This is how much they moved in their previous 5 earnings releases. Stock 1 It was up 10%. It was up 12%. It was up 8%. It was up 14%. It was up 12%. Stock 2. Stock 2's a little more volatile than stock 1 because it's not moving 10%. It's moving 18%, 25%, 32%. This is a volatile stock, right? This stock's got vol. Stock 3. Boring. After its earnings release, it moves 3%, 5%, 1%, 2%, 3%. What is this? Is this Apple? Maybe it's an oil company. Okay, this doesn't really care about earnings. Maybe it's oil. Maybe it's Apple. Here, this is a growth stock. Maybe it's got like a 1 billion market cap. And we go stock 1, okay, a little bit bigger. But now, here's the test. And the test was, what is the average of all these different numbers? And I gave you the answers. The average move on stock 1 is 11%. The average move for stock 2 is 22%. The average move for stock 3 is 2.8%. It doesn't move as much. I want to stop right here, guys. Does everything make sense so far? I'm going through an example. I'm showing you 3 different stocks that move differently based upon their earnings. That's the only thing that I've showed you so far. This makes sense? Before 2011, and I learned this on the floor of the Chicago Board Options Exchange, I look back and realize how much I was gambling on earnings. This has been consistent. We're doing the same thing. All right, everybody understands. The next part, options pricing with 10 days until expiration. So now we're going to say options are going to expire in 10 days, right? Aaron, great question. It doesn't matter. 10% up, 12% down, 8% up, 14% down. It doesn't matter if they're up or down. All that matters is the average movement. We want the average movement. Excellent question. Excellent question. So now, here's where the test is going to come in. It's more of a quiz than a test. So what's the options pricing with 10 days until expiration, but it includes the earnings? So the options need to be pricing in enough movement. So let's say for stock 1, how much movement do you think should be priced into the options? Strangle or straddle? Let's say straddle, but it doesn't really matter, James. And I'll show you why it doesn't matter. Oracle, in this example, Oracle has 7 days until expiry. Right now, a 10% straddle would be 15, a 5% would be 7.5, so it's like 4%. So there's 4% of expected movement in the next 7 days. Higher or lower doesn't matter. So right here, if we know the stock moves 11.2% average on earnings, my question to you is, how much should the options be pricing? James says 10%. Deward says 11.2%. Let's say the options market is pricing in a 10% move. This is not the right answer. This is what the options market is pricing. The options are pricing 21% move, and the options are pricing a 7% move. Which one of these guys are good trades? What's a good trade and what's a bad trade? Stock 1. Are the options pricing in enough movement going into earnings? Let me repeat that. On stock 1, is the options market, it's pricing in 10%. Is the options market pricing in enough movement? Stock 2, The market's pricing in 21%. Is this a good trade? Is the market pricing in enough movement? You guys got it? All right, now the correct answers are coming in. Excellent. So here are the correct answers. And I'm going to explain to you why, okay? 2 are good trades, and 1 is a bad trade. Okay? So look, if there's 10 days until expiration, right? Here, there's 10 days. Oh, I wish my pen was working. My pen's not working well, so... Okay, so if there are 10 days, the options market should be pricing in, well, 11% is just for 1 day, right? What's the percent for the other 9 days? 2%? So the market probably needs to be about 13% here. And because we can get in at 10%, this would be a good trade to buy options. It would be a good trade to do a straddle, a strangle, buy calls if you think the stock's going higher, buy puts if you think the stock's going lower. Here, this is also a good trade because the options market needs to be 25 or higher because we know on one given day, the stock can move 21%. This is not a good trade. The options market might be 4% because it moves 2%, 2.8% on one of those 9 days. The other 9 days, it's a low vol stock. It doesn't move very much. This is very, very, very expensive. This is a bad trade. I like number 1 the best. I like number 2 the second best. Number 3, I don't like at all. Now, I can't say this enough times, guys. I've been trading professionally since 1997. Going into 2011, when I started on the floor of the Chicago Board Option Exchange, I thought I understood options, but I didn't. I understood calls and puts, but I didn't understand volatility. This is exactly how we trade earnings, except I go and backtest the different names, and then I share trades based upon historical movement. So what's the actual trade for 1? Buying options. Buying a call, buying a put, buying a straddle, buying a strangle. Why 1 over 2? Just because, I mean, it's kind of the same thing. It's just a lot more expensive vol. But 1 and the 2 are kind of the same. Good point. It is a phenomenal, phenomenal strategy. And this has been the best strategy at MIT since we started. I'm going to move on to another earnings trade. We just had earnings in Pinterest. I actually shared Pinterest last week. I just shared a chart of it. I didn't share the actual trade that we did in our membership. Good example. I'm going to move on from this example, guys. This makes sense? Any questions? Rewatch the video. Feel free to hop on as we do 10 minutes early, guys, and ask whatever questions that you have. That's why we get on early. Yeah, Pins is doing great. Let's talk about Pinterest. I like to think of Pinterest as a social media company that nobody uses. Does anybody use Pinterest? A lot more males on here than females. I think female dominates Pinterest. It's doing great in shopping. I don't really use Pinterest. It's just not for me, I guess. But nevertheless, Pinterest had blowout earnings. I shared this chart last week. We were getting 2 buy signals on our weekly chart. Okay? That's pretty telling And when we can find a way or a reason to get long this company, it makes pretty good sense, especially when we have those two different buy signals. Pinterest, see, wives. I think my wife's on Pinterest too. Wives love Pinterest. Let's talk about their earnings though. Strong revenue growth. Okay, revenue $855 million, expectations. So they beat that. This is the big number that people are talking about. 570 million active users. The projection was 563. I tried to find a chart of this, but the chart has been steadily growing since 2022. So look out for Pinterest. Pinterest doing real well. You got to say AI is driving engagement. Sure, positive net income, but overall, Pinterest, a nice smart rally from that chart. We're doing great, guys. For anybody who's not part of the membership, if you want to be part of the Discord community and get access to the trades that I share, check out masterthetrading.com/advanced notice deal. For your comfort, 30-day money back guarantee, no questions asked. Okay? This needs to make sense for you, for it to make sense for us. And Tom, thanks for sending in. Jonathan, my wife and I both thank you for changing our lives. Please accept a small gift. We wish you nothing but good fortune for you and your family. So, Tom, thanks for sending that. For everybody else, check out Advanced Notice Deal. Everybody in All Access, let's go over some of our earnings trades. I want to field any questions you guys have. And for everybody else, we're going to be live Monday, 11 a.m. Eastern Time, and I hope to see you in the chat. Thank you. Hope you enjoyed that All Access. Don't go anywhere. We'll be right back.